If we look at Fondersel Internazionale, the environment for bond investing today represents a somewhat unique challenge. With extraordinary monetary policy across the developed world, artificially low rates and negative real yields, the rationale for owning broad-based fixed income is certainly questionable. Given the inappropriate level of risk premium now present in the asset class, underlying managers are less inclined to take broad directional bets, preferring instead to take active risk in an attempt to beat headline indices, harvest a higher yield, and/or for risk mitigation purposes on the asset class. To this aim, managers are seeking to exploit the widening geographical variations that now exist with regards to economic growth, both between regions and also within them. We believe that skilled fixed income managers can add value through an understanding of the fundamentals of these differences and also the individual policy responses by central banks. Two obvious examples recently has been a preference for the growth characteristics of North America versus Europe, and within the Eurozone itself, the preference for Germany versus much of the periphery. Whilst the recent liquidity injection in the form of LTRO has undoubtedly been successful in reassuring the market about the systemic risk of a collapse of the Eurozone banking system, its ability to promote credit availability to the large real economies which need it, i.e. Spain, is much more questionable. Today we have a scenario whereby Germany continues to grow strongly, whilst much of the periphery is either nearing or already in recession. If we look at the shape of yield curves across the developed world in general, then we continue to find interesting investment opportunities in emerging market debt. Investors are able to gain the potential for higher yield through access to a sovereign, which from a current account perspective is in a far better position to service its debts than many of its developed market peers. Furthermore, in addition to this higher yield, investors can also gain participation to the growth dynamics represented by emerging market economies. This is through the participation in the appreciation of local currencies, which can have a sufficient impact on one's yield enhancement. Now, it must be acknowledged that the environment for global fixed income investing today is not without its challenges, and for this reason, a hunt for high yield does not come for free. If we consider extreme policy intervention, heightened moral hazard, and the risk-on, risk-off environment that has really categorized the post-Lehman era, then there are sufficient challenges still for the strategy. If we look at the summer of last year as a good example of this, when fear returns to the market, a flight to quality can soon follow, and investors can happily bid up assets such as US Treasuries, irrespective of the real yield that offers them. With regards to Fondersel Internazionale, what we have aimed to do is gain a balanced approach to yield enhancement. We have aimed to blend several passive players with those specialised in taking active risk, and those with a bias towards emerging market debt. The key here is to understand our real exposures with regards to duration, country-specific risk, and foreign exchange on a look-through basis. It is an understanding of these dynamics that can allow us risk mitigation and also diversification at the aggregate portfolio level.